Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 17th of April. I'm Daniel Lam, your host for the podcast. Today is my last podcast before I go on leave. I will be going to Ulaanbaatar for 2 weeks to participate in the qualifier for the Chess World Cup. My colleagues will be covering, so please continue to tune in into Cut to the Chase podcast. The Chinese data yesterday, quote-unquote, threw some spanner into the works. Now, in our most recent podcast, we spoke about how China is likely to be combating the effect of the tariff by letting the CNY to weaken orderly, as well as stimulating its economy via fiscal stimulus. However, the data did contain a decent set of beats. For example, retail sales year over year was 5.9% versus expectations at 4.3%, while industrial production was at 7.7%, and that beat expectations at 5.9%. So therefore, in typical good news is bad news fashion, the Hang Seng Index came under pressure because with such decent data, there would be less imperativeness for fiscal stimulus, or at least for strong fiscal stimulus from the Chinese government. The way this is, it may leave Chinese equities hanging high and dry, i.e. both US and China unwilling to be the first to back off from the trade rhetorics, and strong stimulus may not be coming through so easily in China. It is possible that the Hang Seng Index may drift lower in the near term to support level at 20,300, while resistance has moved down to 21,600. But taking this from a glass half full perspective, a number of key technology stocks have given up much of their gains since the emergence of DeepSeek at the end of January. If there were to be further correction in the Hang Seng Index to the 20,300 level, or even dip lower than 20,000, then this can be a good opportunity to be buying areas like Hang Seng Technology. Certainly the valuation is attractive, trading below minus 1 standard deviation versus its long-term valuation average. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.